Hello financial investors and welcome to the channel. My name is Brent and today we're going to be taking a look at the three main indexes, jumping over into the M1 Finance account, taking a look at the performance for the week in comparison to the main indexes. We're then going to go ahead and go over what stock I'm planning on buying today here on Tuesday and go ahead and do a deeper dive into the specific stock. I do have an article I'd like to share with you, goes into all the specific ratios and PE, price to sales, that I would like to cover, but it does it in a very summarized fashion and it goes over into it very quickly, which is exactly what I want to cover in this video. So without further ado, if this is your first time here on the channel and have not yet subscribed, definitely hit that red button below to subscribe to the channel. If you do enjoy this video, find it helpful, hit the thumbs up button below. And if you have any comments or questions going over this video, the stock market, dividends, real estate, or personal finance, drop it into the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. So starting off here with the S&P 500, we were off a whopping 1.26% last week. This puts it in third place as far as performance, but second place as far as year-to-date total performance. So 1.26 there over the 5 days, up 3.06% year to date. Now in second as far as year to date, we have the Dow Jones, but we can see here over the past 5 days, they had a whopping 1.53% gain. So day after day, and you can see here on close, they did come back, but then on Thursday on the open, I believe that was some earnings that came out there on Thursday, propped up that Dow Jones for the better here. So up 1.56%, up year to date 2.84. And the NASDAQ, this is our winner as far as year to date, but you can see right along with the S&P performance. So year to date up 4.64% and 5-day change 1.24%. So very nice. So we have the Dow Jones as far as the 5-day performance there, up 1.53, followed right behind by the S&P and the NASDAQ, but the NASDAQ has a clear win year to date going for it. So let's go ahead and jump into the M1 Finance account. I do want to go ahead and go over what stock I'm planning on buying and then go into the article covering much of the same information I found on my own, but I wanted to go ahead and use this article because it does a very quick deep dive into all that I see in this Dividend Aristocrat and why I am buying it right now versus waiting for another opportunity. So over on M1 Finance, we'll go ahead and take a look at the 1 week performance. I did change my deposit days to Friday. That way on Mondays I have the cash available in the account. That way I can make my Monday buys, but the market was closed here on Monday, so we're going to be doing our Monday buys here on Tuesday. So we have $137.76 we're going to be investing towards one specific stock. The performance for last week, here we can see we returned a 1.4%, roughly $287, and we earned but have not been paid out dividends of $16.57. Now, as far as the performance last week, we can see that our losers were Tanger Factory Outlet, Wenco Group, and Lancaster Colony, our 3 losers, and our 3 winners were CenturyLink, Cardinal Health, and CVS Health Corporation. So not a whole lot of equity within CenturyLink. I'll probably sell out of this position here in this video and just use that equity towards this other stock here. I don't plan on holding CenturyLink for a long position. I'm just kind of waiting for the next run up and then kind of selling it out of the stock. That way my stock is mainly just thinned down to Dividend Aristocrats and other companies that I believe in for the long term, and CenturyLink is not one of those. So just looking at the performance for last week, one of the stocks, or the stock that I'm actually planning on buying, had a pretty good hit taken to it. So Waco Group is going to be the stock that I'm planning on buying this week. It went down 3.43% last week, so it puts it at a very nice position as far as the total percent down. It is down a whopping 14.9%. So it came up on my radar and I decided to go ahead and start an investment. It's not up to that $800, $900, $1,000 total cash that I want to have invested towards it. So this is the best opportunity for me to just begin throwing more money at this as it's falling. The faster it's falling, the more I want to pick up more of it. So here it's down almost 15%, and this is, what I believe is going to be a really good opportunity for me. We can already see Altria. Altria was another position that I threw cash at as it fell further and further down. 15, 20, 30%. I just began to throw, more cash at it, building that position up, and we can see Altria is now down roughly 3.02%. So I want to go ahead and do that same thing here with Waco Group. But before I go ahead and go into the specific buy for Waco, I do want to go ahead and cover just a little bit of the background of Waco and what they do. So I know I've covered it in the past, but just for everyone here who is brand new to the channel, brand new to kind of hearing about this specific company, they are in textile apparel, footwear, and accessories here. This is a Dividend Aristocrat, having grown and paid out their dividend for the past 25 years or more. This one has been growing and paying out dividends for the last 38 years. This one has a payout ratio of 61.94. This is a little bit off. This is incorrect as far as earnings per share. So this is showing 0. We'll kind of ignore that for now. Consumer and the dividend yield for this specific company is a 4.10%. Now, if you're wondering when this specific company pays out dividends or goes ex-dividend, it goes ex-dividend every 3, 5, 8, and 11th month. So it has a sort of a pattern here where sometimes it may actually go ex-dividend on the 12th. So here, there's the 12th here. So 1, 3, 5, 8, 12. And then it kind of repeats. So that's the dividend history as far as when it goes ex-dividend, how long it's been growing and paying out that dividend, and it has a pretty solid payout ratio. Now, going over the article that I was kind of reading and wanted to do a deeper dive into with you, it kind of covers the specific stock that I've been wanting to begin buying. Now, all 5 of these are actually on my watch list. It's a financial company. Eaton Vance, that one's already in my portfolio. 3M, that one's already in my portfolio. Walgreens, already in my portfolio. And WEYS is now building up a position in my portfolio. I'll get it to a core holding about $800 to $1,000 within this position in this portfolio. Now, I only want to go ahead and cover WEYS, but this article is actually really good. If you're interested in any of the other 4 of these, I'll go ahead and have this link down in the description below if you guys would like to check it out. So I'm going to go ahead and just kind of move on down to the Waco Group and kind of go over what this company is and what they design. So here, Waco Group is a shoe company that design and manufacture different footwear for men, women, and children. A lot of their brands include, actually down here on the bottom, it does include some of the brands over on Dividend.com. I believe they did. Possibly not. Okay, so maybe not. But they do a lot of their business in the United States, in Canada, in Europe, Australia, Asia, so they're all over the place. They have not just a national presence, but they have an international presence. So depending on wherever they're doing business in that, they are very diversified. So if anything happens to them here in the United States, say we go into a recession, they still have many other segments scattered throughout the rest of the world. Now, here was where it did a really good comparison in comparison to, say, the preferred ratios of, say, the S&P 500, having that PE ratio currently, I believe, at a 25-26, whereas WEYS currently has a PE ratio of 10.77%. We can see that this price for this company is right around $23.94. Its 52-week low is fairly low, just a slightly off here. It's $21.80. Its 52-week high is at $34.44. So percentage below its 52-week high is about 33%, meaning that we're at a sizable discount in comparison to where its 52-week high is. Its PE ratio, we already sort of covered that. I like to look for companies and buy companies right in that 15 and below. This one sits well at a 10.77. Its 5-year PE average is 16.98. So over the past 5 years, where the market's been, doing really well, and so has this company, its average is right about 17, and it is now at roughly 11. So it puts it at a really good price to earnings ratio in comparison to its history. Now, as far as its payout history and its ratio, we already saw over on Dividend.com. This one here is showing its payout ratio of 61.94. Here, this one's showing a little bit different. This one's showing at a 44.28. normally when I go into look at their earnings, I'll go over to their website. I don't have that pulled up at the moment, and I don't want to spend too much time going over it. So we'll just say that their payout ratio is anywhere from 44 to 60%, and either way, it's 60% or less, which is usually where I aim for all my holdings, and it's just a safety. Current yield, we already saw that it has a 4% yield, and it is actually yielding right around a 4.10. So it's right within that area. It's not just a 3% dividend yield, it's at a 4% dividend yield for this Dividend Aristocrat. Its 5-year dividend average is at a 3. So we're getting a 1% increased yield on our starting value. Again, it's been paying out and growing dividends for the past 38 years. That matches 1-year growth rate around 4.4%. 3-year, 4.2. So it's very consistent. We can see it's 1-year, 3-year, 5-year, 10-year. It's very consistent between 4.4 and 4.9% growth. So it's all pretty solid there. This actually has preference of greater than 5%, but I would say that this, if you were to round it, it would average about a 4.5, 4.6 between the lows and those highs, putting it at a fair. And it's also a footwear company, so I'm not going to say that it's a highly growth, and it's not a Netflix, it's not an Amazon, a Google. It's a very slow mover that's very diversified. So this just kind of went over its cheat sheet. It went over a large amount of what many investors like to do a deeper dive into. They like to look at their 52-week low, 52-week high. How much of a discount are they actually getting when they're buying into the stock? Is there much risk there? Is this stock trading at their 52-week high or making new 52-week highs? That could seem very risky. This one is only slightly off its 52-week low and 33% off its 52-week high, putting it at what I would say pretty safe. Its PE ratio also really low as far as average of 17. Its payout ratio, current dividend yield, and all the other statistics that we sort of hit there all make it look like a really good, just long-term company. And right now it's getting hit pretty hard, and it does go into a little bit more information here, which if you'd like to pause the video and read it, you can. But again, I will have the specific article linked down in the description below. That way, if you guys want to take a look at Walgreens, Eaton Vance, what's it called, BEN, I forgot what the specific company was called, but I know it's a financial. I will have this link down in the description below. But this, like 3M, like Walgreens, it's going to be, it's beat up right now here in the short term, but it has really good fundamentals. It has good price to earnings. All of its basic fundamentals are there. It is just kind of getting beat up here in the short term, and that is because just all malls, apparel, shopping malls are getting hit. Anything related to like clothing, footwear, it's in a troubled time right now, and I think this is just giving us a good buying opportunity for myself. So that is why we are going to be buying into the specific company at this moment and just kind of loading up on it while we can. And if it does continue to fall, that's fine. It could go as low as 30-50%, and I'll continue to buy more of it because I do believe it is going to turn around. It'll be fine here in the long term, and then I'll just make my recovery and also be yielding a 4% starting yield, plus they'll be growing their dividend year after year from here, just continuing to snowball that dividend yield higher and higher and higher year after year. So I am going to be selling out of the CenturyLink position. This one up, let's see here. Overall, CenturyLink has made me a roughly 27.31% return. Most of this is actually from market gains, I guess $8.49, but I just want to be able to use this capital elsewhere towards something that I'm more in line with my values and what companies I actually want to be invested in. So instead of doing it this way, because if I sell the equity here within this account or sell the equity within this position, it's not going to actually remove it from my portfolio. I just kind of had an epiphany there as I was going to do that. So what I actually want to do is go back. Let's exit here. I'll show you. I did make my cursor bigger. You can see the cursor here on the right hand side. I had a comment in one of my past videos saying that it's very hard to see my cursor, so I went ahead and increased it on all the activity here that I do on my computer. So on the portfolio tab, I want to go ahead and edit my total portfolio, And what I want to do is find CenturyLink here. So I'll kind of just go through here, locate CenturyLink. I could probably just do a Control F and type in CTL and go ahead and check the box, and I want to remove it. Now this is going to remove it from my equalize there, and we'll go ahead and hit save. Now what this is going to do is it's going to sell all the equity that was within this pie during the next trade window, and the proceeds will be reinvested into the pie. So what it's going to do is just kind of remove CenturyLink there. It's not going to be in my pie anymore. I'm going to have roughly $57 more to invest. I guess I could have. See if I can do. I wonder if I could have. Let's add it back in real fast. I want to see something real quick. Add to my basket, add it in, equalize, save it. Sure. Okay, now it's back in my pie. So I want to go ahead and select it. I want to see if this allows me to have more equity, because I saw at the top I wasn't able to use as equity, and I want to use that extra $57.80 tomorrow. So there we go. We have our $57.80. Looks like the cash doesn't actually get added until it's actually sold. So that's unfortunate. So I can go back in here, find my CenturyLink, go ahead and remove it. I have to equalize all my other holdings, save that, confirm. And now CenturyLink is going to be removed tomorrow. I do want to go ahead and buy WEYS and purchase the total amount here. So I'm going to go ahead and buy $137.76 worth of WEYS Group, Waco. So I'm not able to use the CenturyLink position that I'm selling out of. Normally in the past, in 2019, M1 Finance had a different policy where you were able to overinvest into specific buys. So if you had cash available in the future, it would just automatically auto buy those specific holdings. They've really changed it up here in 2020, so I'm still kind of getting reused to the platform, but we'll kind of see how this kind of goes here into the future. So ticker symbol for this specific company again is WEYS. I do have a link down in the description below, which will go to the article if you guys would like to look into any of the other 4 companies, as well as WEYS if you guys would like to do a deeper dive into and looking at this specific article. Do that as well. So that is going to be it for today's video. If you guys have enjoyed this video, again, hit the thumbs up button below, subscribe to the channel by hitting that red button below, and leave me a comment. What other companies are out there that you see value in that are currently underwater, getting beat up here in the short term, but could potentially be turning around? Let me know in the comment section below. Go ahead and do a little bit of research, and we may actually do a video on something that, one of my viewers, subscribers leaves down there. We'll kind of check it out here in an upcoming video. So that is all I wanted to cover here in today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye. Ouch. So that is it.